The why machine. Because understanding the why behind things isn't just a pursuit of knowledge, it's the foundation of true power, especially when it comes to your money. We're not just going to talk about investing today. We're going to dissect the very philosophy of it, the language, the concepts. We're going to get to the why behind the financial world. In the grand puzzle of personal finance, a single piece stands out. It's not just a piece of paper or a number on a screen. It's a tiny, tangible slice of a company's soul. I'm talking about stock. A stock is a representation of ownership. When you buy a stock, you aren't just betting on a company. You are becoming an owner, a partner in its journey, its successes, and yes, its failures. And that tiny slice? That is a share. Think of a company as a massive pie. Each slice of that pie is a share. If you own 50% of all the slices, you own half of the entire pie. In essence, you own half of YouTube, half of Apple, or half of Google. You are a shareholder, a partner, a part owner. Now, where do these ownership transfers happen? In a digital town square known as a stock exchange. This is the marketplace where buyers and sellers meet, where demand and supply set the price. It's the central nervous system of the market. And the companies on this exchange aren't just any companies. They're public companies, entities that have opened their ownership to the public to raise capital. This act of a private company going public is an IPO, or initial public offering. It's the moment they step onto the world stage and say, "We're open for business, and you can own a piece of us." The market, like life, has its seasons. We have the bull market, named after the bull's upward thrusting horns. This is a time of optimism and growth, where prices are generally rising. Then we have the bear market, named after the bear's downward swiping paw. This is a period of falling prices and pessimism. These animal metaphors are more than just labels. They represent the collective psychology of millions of investors. But how wild is the ride? That's volatility. It measures how much the price of a stock wiggles and sways. A highly volatile stock is like a roller coaster, fast, sharp drops and climbs. A less volatile one is like a gentle river. Related to this is volume, which is the total number of shares traded in a day. Volume is the heartbeat of a stock. High volume means lots of people are getting in and out. And that brings us to liquidity, which is how easily you can convert your stock into cash without affecting its price. High volume usually means high liquidity. You can get in and out quickly and easily. Let's broaden our scope. When we talk about capital, we're not just talking about money. It's a vast concept. Capital is anything that can be used to generate wealth, the machines in a factory, a patent for an invention, or the money in a bank account. It's the raw material of wealth creation. But be careful. Sometimes, optimism can get out of hand, leading to a bubble. A bubble is like a balloon filled with too much hot air. The price of an asset inflates far beyond its real value, driven by sheer hype. Eventually, that balloon has to pop. The price crashes, often leaving a trail of losses. The key is to understand the difference between true value and inflated hype. Now, as an investor, you'll accumulate a collection of these assets. This collection is your portfolio. A portfolio is your personal financial universe, your own galaxy of investments. And each star in that galaxy, those are your holdings. Let's talk about the cost of money itself. Interest. Interest is the fee for borrowing money. If you lend money, you get interest. If you borrow, you pay it. This is the fundamental principle behind bonds. When you buy a bond, you're not an owner, you're a lender. You are giving a loan to a company or a government, and in return, they pay you interest over time. Both stocks and bonds are known as securities tradable financial instruments that represent value. Within the world of stocks, some stand out. These are blue chip stocks, named after the most valuable chip in a poker game. They come from well-known, established companies with a strong history of performance. Think of the titans of industry, the ones that have weathered storms and continue to grow. Many of them pay dividends, which are a portion of the company's earnings paid out directly to shareholders. It's like a thank you note from the company, a small but consistent reward for your ownership. And what about the global stage? Forex, or foreign exchange, is the trading of one currency for another. It's the largest financial market in the world, a silent, constant conversation between economies, where the value of a dollar against a euro is determined second by second. So, you want to buy some of these securities? You can't just walk up to the exchange. You need a guide, a connection. This is a broker. A broker is a platform these days, almost always online, that facilitates the buying and selling of securities on your behalf, usually for a small fee. They are the gateway between you and the market. So, there you have it, the why behind the what. We've unraveled the language of the markets, from stocks to brokers, from bull markets to bubbles. This isn't just a list of terms. It's a philosophical framework for understanding how wealth is created, exchanged, and grown. It's about being a conscious participant, not just a spectator. The next time you see a headline about a bull market or a company's IPO, you won't just see words. You'll see the underlying why. You will understand the psychology, the mechanics, and the potential. And that understanding, my friends, is where true financial power begins. If this video gave you a new perspective, a fresh why, then do me a favor. Hit that like button, share it with someone else who needs to understand the market, and most importantly, subscribe to the Why Machine so we can keep asking the important questions together. Your journey to financial wisdom is just beginning. See you in the next video.